It is almost the end of the year, which means that yes, the loan limits for 2025 have now been announced. So in this video, we're going to talk about what the new loan limits are and why you should even care as a first-time home buyer or move-up buyer or even an investor. So if you're new to the channel, I'm a mortgage lender licensed in 48 states. My team, one of the top purchase teams in America, and we talk to people all day long about mortgages. So that's why I'm definitely going to tell you why you should care. Okay, now, first of all, what is the conforming loan limit? Great question. Now, this is determined by FHFA. And what they do is they look at how much appreciations occurred in terms of housing over the last year on average. Based off of that, they increase the loan limit. Now look, if we were in a depreciating market, would they decrease it? Not necessarily, but they may not raise it. Okay, so there's been a lot of chatter this year. Are housing prices going up? Are they going down? What does the data say? Now, if housing prices were going down, you would not see an increase to the loan limit. Let me stress that again for all the housing crash bros that love to troll my channel. If housing prices were going down, you would not see the conforming loan limit increased. I get spicy and then I start stuttering. So here we go. Okay. So how much did home prices, on average, across the United States go up in 2024? You want to guess? If you want to guess, drop it in the comments, help the algorithm up, give me a like or a dislike, whichever you want. Let's try to get the algorithm to acknowledge our existence. Thank you. 5.2%. Yep, 5.21% to be exact. So basically, because the average appreciation across the United States in 2024 thus far is 5.21%, FHFA has raised the conforming loan limit for single families, okay, or one unit, so it could be a condo, townhome, manufactured, one unit properties to 806,500. Yeah, it's so interesting because it's like if you look at where loan limits were even 10 years ago, like you can definitely see how much housing prices have increased. So yeah, the new conforming loan limit for a single unit is 806,500. I say that because there's two caveats to this. Now, first of all, could you be in an area of the country where the loan limit's even higher than that? Yeah, you could. If you're like San Francisco, New York, it is now, it's such a random number, 1,209,750. Wow. Wow. That is the conforming loan limit now in certain parts of the country. It's as high as $1.2 million. That's wild. Okay. Now, what does that mean to you? Simple. If you're looking at buying a home, it means that if before you were having to get a jumbo loan, because let's say you were looking at a loan and it was going to be $780,000, now you're not looking at a jumbo loan. And the big difference on that is that conforming loans are way easier to qualify, way easier to qualify. So what I mean by that is, look, with a jumbo loan, you're going to need a bigger down payment. You're going to need reserves, meaning you're going to need principal, interest, taxes, and insurance stacked up beside. There's more stringent underwriting with a jumbo loan. With a conventional loan, okay, if you're looking at anything now up to 806,500 and you are a first-time home buyer, 3% down. That's right, 3% down. I'm not kidding. It's wild. 3% down. Yeah. Now, look, if you are in one of those categories or counties where they have those higher prices, the 1.1, the 1 million, 1.2, 3%, no, 5% down. I'm not kidding. Seriously, 5% down. And I keep on saying I'm not kidding because there's this huge myth that you have to have a ton of money to put down to buy a house. Those rules have really shifted over the last decade as we've seen rents increase as well as housing. It's not realistic. You know, back in the day, because a lot of people will hear their parents or grandparents say, well, if you can't do 30% or 20%, you shouldn't buy a house. Houses were like $9 back then. It was a lot easier to save for. With the way housing costs are now, it's not super realistic for most people to have 20+% down unless either A, they already bought a house, got some equity and have the money, B, they're rich, or C, they're getting a gift from their parents. And look, we see all of that, and that's all fine too. But it's important that you know that, look, if you're in an area where the county limit in 2025 is 806,500, first-time home buyer, 3% down. That's it. Conventional loan, 3% down. Now, if, let's say you're like, well, I have another house, Jen, but I want to move into it, what's the minimum I would have to put down? 5%. Okay, 5%. Now, if you're looking to buy an investment property or second home, there are different guidelines for that. Same loan limits, right, which is great. You know, the multi-units are very interesting when you look at how high those loan limits are, because more units equals higher loan amount. Great. Now, what would I suggest? Super simple. If you are a conventional conforming home buyer, meaning you are not FHA, and you are not VA, I would recommend that you look up your county loan limit for 2025. That's right. Look up the area that you're looking in, what that loan limit is. Now, if you're like, Jen, I'm buying a $200,000, $300,000, $100,000 house, don't worry about it. You're good. You're under the loan limit. You're totally fine. However, if you're in an area like Los Angeles, New York, you know, parts of Virginia, parts of Florida, parts of everywhere, you may be on the cusp right now where you're like, I can't buy because I have to do jumbo and I don't have the down payment for it. Check out your county loan limit because you may have more options now. One thing that I would stress though, to really be mindful of, there's parts of the country, and I always go back to Southern California, really most of California, where you can have one county right here where the loan limit's under these new guidelines going to be over 1.2 million, and then right next to it there's one that's 806. Okay, so if you're looking in multiple counties, you know, Riverside, San Bernardino, Los Angeles, Orange County, make sure you're looking up those loan limits. A lot of times people go, oh, well, my lender said it was fine. Your lender's not paying attention. I hate to say that. I know it sounds mean, but it's true. You know, a lot of times lenders get tripped up on this because either A, they don't know you're looking in multiple counties, or B, they're not savvy enough to realize that there can be differences amongst counties. So if you're a home shopper looking in multiple counties, I'll have a link. I'll make it easy. I'm gonna put a link in that's gonna take you guys to the FHFA legit, important, website where it lists out county, and then it has, you know, 1 unit, 2 unit, 3 unit, 4 unit, so that you can get it straight from the horse's mouth. So look, if you're within the loan limit, it's just easier to get a loan. It's that simple. Fannie and Freddie are way easier in terms of guidelines than a jumbo loan. Now, if you're FHA, different loan limits. Of course, why would it ever be easy? So make sure if you're doing an FHA loan that you're looking up the 2025 FHA loan limits because they are different than conventional. And if you're VA and you have full entitlement, meaning you currently don't have a VA loan that you plan to keep, you don't have loan limits, friends. And if you are a veteran that has maybe one VA loan and they're thinking about buying another house and keeping this one, well, these loan limits will come into play on a max mortgage worksheet. So look, housing prices, it's messed up, right? Okay, because here's the thing, like as a homeowner, I want housing prices to go up. It's great. I want, you know, for all my clients who have bought, I want home prices to go up. Like equity is the American dream. For home buyers though, we're all like, you guys need a break. So the good news is, it's not that bad. 5.2% on average, you know, based on the stuff we were seeing in 21 and 22, like we are normalizing, which is good. But for everyone who was thinking that we were in a crash because of some headline they read or something else, the data doesn't point there. So look, questions, comments, want to get pre-approved, reach out to the team and I, 786-933-2077. I have myself, Linda, Sandy, Alyssa, Christina, 7 days a week just to answer questions, and we don't charge for that. So use our expertise. We are here to help you. I hope this helped.